India has been doing pretty well, both on the economic growth front and corporate earnings in generally has been little ahead of the expectations. And interest rates have remained more or less stable, given the stable inflation that we have seen for quite some times. And even the recent policy which was released last week have reinforced some of the economic parameters in which India has been growing, whether it is with respect to the capital formation, whether it is with respect to the manufacturing activities pick up, whether it is with respect to the price stability that you have seen across the different product segment. And rural India is also something which has been not firing as much as should have been, especially driving the consumption demand. Also, we are seeing some kind of solar learning coming for that segment as well. I think overall basis, India I think continues to do well. And one good thing is, given the interest rates have remained more or less stable, the investments activities from the private sectors have also been picking up in the last few years, which generally I see it as a sign of sustaining of economic growth as we move forward. Of course, as it stands today, the government has been focusing more on the election campaigning across the country, but still there has not been any slowdown in terms of investment, both from the public sector as well as private sectors.
Where would you go overweight sector-wise, Mr. Balasubramanian, in this market, and underweight in India for viewers who are looking to invest in India, for foreign investors who perhaps are tuning in right now? Where would you direct them in terms of the investment opportunity India has right now?
I think clearly the way I think investment demand is picking up, I see actual widespread growth coming in across the country. Therefore, we'll probably see continued interest coming in the breadth and width of the market, which basically go beyond the large cap, will continue to be the driver for the next 10 years. Second, capital goods sectors would continue to remain a big sector to watch out for, given the fact that investment activities just started picking up in the private sectors. We'll probably see the momentum continuing even going forward, especially post-election. We'll see ramp up of investment happening in the country. Therefore, capital sectors will remain one of the most attractive segment. I think banking and financial sectors have gone through 3 years of consolidation, both in terms of price corrections as well as the time value corrections. And credit growth continues to continue to outgrow the deposit growth. And margins have been pretty maintained. Therefore, banking and financial sectors, being one of the large sectors, will probably start seeing some kind of tractions, given the fact they have actually gone through a correction. And third, of course, I will see the automobile industries continues to do well. We will probably see the consumption demand coming in, especially in the automobile sectors, including auto ancillaries. I think we should see that momentum continuing. Last but not the least, the consumption as the demand, the last few years have gone through a consolidation phase. And with the rural economy picking up, the agri output has been pretty good in terms of lifting the rural economic growth. I would also probably assume that consumption-driven sectors also will see a renewed interest this year, given the fact the last few years have gone through a phase of consolidation, I would say.